What is investing in stocks? First, we got to understand what stocks even are. The stock market is a collection of exchanges through which equality shares of public companies are issued. So what this means basically is that you can go in, you can buy shares of stocks, and you get a part of that company. What is the history of the stock market? In the late 1400s, Antwerp in modern-day Belgium emerged as the center of international trade. Merchants speculated on rising prices, anticipating profits. Bond trading also took place during this period. Then we go all the way to 1611 when Amsterdam witnessed the birth of the first modern stock trading system that we see today. Dutch East India Company became the first publicly traded company dominating the exchange. Then we go all the way to the late 1700s, where a small group of merchants gathered under a buttonwood tree in New York City. Their daily practice of buying and selling stocks and bonds laid the groundwork for what we know today as the New York Stock Exchange, NYSE. In 1790, the Philadelphia Stock Exchange started. In 1896, we've seen the Dow Jones Industrial Average, DJIA, begin with compromising of 12 different industries, has since became a benchmark for the overall stock market. And then in 1923, during the Roaring Twenties, the early version of the S&P 500 index was created by Henry Barnum's Poor's Company, Poor's Publishing. The benchmark that we know today goes by Dow Jones and the S&P 500, which is a collection of multiple companies and how their stocks are doing, and takes that average. This is also in a way to prevent crashes, because some of the biggest crashes we have seen in the stock market is dating all the way back to 1637 during the Dutch tulip bulb market bubble. Basically what happened was, in the Netherlands, the rise of the single tulip bulb was actually just as expensive as a house, and this led to eventually the entire market for the tulip crashing, and what sent a huge downturn throughout the actual economy, which is crazy. And then we've seen another big crash from 1791 to 1792 during the financial crisis. The first US stock market crash occurred after the Bank of the United States overextended credit creation. During this time, the Secretary of Treasury, Alexander Hamilton, implemented measures in order to stabilize markets, but the panic still had repercussions. And one of the biggest crashes that we know of in all of history for the stock market is the Wall Street crash in 1929, which started the entire Great Depression. In 1987, we also had a Black Monday crash. On this fateful day, the stock market experienced the largest one-day decline, and the panic selling from a lot of consumers ended up making things worse than it really could have been. And during COVID-19, actually this recent, in 2020, it has been the last big crash of the stock market. But we can't have huge crashes without having huge peaks. During the 1920s was actually some of the best times that the stock market was at its peak. Another great time in history for the stock market was when the Dow Jones Industrial Average experienced substantial growth during the period of the dot-com boom. This had tons of consumers going full in, investing in stocks and shares and bonds to technology companies. Something that's actually really interesting about the dot-com boom, to this day, the longest running bull market in US history, which spanned from March 1991 all the way to March of 2000. These are some of the best highs we've ever seen, and the most recent one being in 2021 to 2022, when we're seeing the stock market continuously going up after its COVID-19 crash. With all this in mind, we have seen the highest of highs, we've seen the lowest of lows. What makes you, an investor, want to get into the stock market knowing how risky it can be? Well, the stock market can have a lot of pros and cons, as we can see. Some of the pros with the stock market, though, is it's easy to invest. And this is a good way for you to get involved and have another source of income, even if it's just a little bit. You get that through your dividends. You can also do day trading. The bad thing about day trading, though, is nearly 80% of traders actually lose their money, which begs the question, what is the best way to make money in the stock market? Well, it takes a lot of time and a lot of research and a lot of patience to generate good money in the stock market. Well, going into the S&P 500, going to Dow Jones, if you want to go into individual companies and buy stocks, you have to know what their ups and downs were, know the history of the company, know where that company is planning on going. Are they planning on expanding? Or are they planning on staying consistent where they are? And know their future goals compared to your future goals. You want to know their dividend payouts. How much is it per share? Are they at a high right now? You want to try to buy low and sell high. But the best way is to actually buy low and buy consistently and hold on to those shares and have them just generate money throughout years. It's better to have that money just sit there and rest and generate more money for you than it is to try to be a day trader. As we can see, by 80% nearly losing money is not good. Big tip that goes under the radar with stocks is to never panic. We talked about the one-day crash on Black Monday, and some of that got generated by investors seeing the stock market slowly start to go down and then hurried up and panicked and tried to sell their stocks, which actually inevitably made things worse. Sometimes the best thing you can do with your shares of stock is to just hold on to it and just let it ride out. It'll be okay. As long as you've done the proper research, things should come out on the other side and we should get all-time highs once again. It's just a matter of letting it ride out and being patient. By having your money in the stock market, it's a good way to combat the inflation that we see every year. So what are some of the most popular ways to invest in stocks? Number one, online stockbrokers. This is one of the easiest, most common methods is through an online stockbroker. After opening and funding your account, you can buy stocks directly through a broker's website in a matter of minutes. Usually this will have some cost involved because you're paying a seasoned vet to do the work for you. Not only are you just trying to buy stocks. Another option you can have is the full service stockbroker, which provides personalized advice and assistance. The problem with this is it's going to be even more expensive, but it should help you in the long run because having a seasoned vet can normally help you generate more money. Number three, something that I personally do is using trading apps. I personally use Robinhood. No, I'm not sponsored by Robinhood, but there's also Webull, there's also Acorns, and you can buy stocks directly through these platforms and do it all on your own. The problem with that is if you're not somebody that knows exactly what you're doing, this could be a good way to lose money, and I have definitely done it. And so it is a good idea to probably pay a little bit of money and just take it to an online stockbroker or full service stockbrokers. In my personal opinion, trading apps are very user friendly. It's just the problem that people don't necessarily know what we're doing, and even if we do tons and tons of research, could still possibly get it wrong. There are also direct purchase from companies. This is super rare, but it can be a possibility. Some companies, you could go directly to that company and buy the shares of that stock. This can be very difficult and tedious because most companies won't do it that way anymore in the age of technology. Now I got you right where I want you. You want to invest in the stock market, but you don't have any money. Well, you'll be pleased to understand that it only takes $1. Only $1 is all you'll need to get involved with stocks. Some companies, you cannot buy the stock without having full shares, so they have fractional shares, which is where you buy just what you can with whatever you have. But that's the whole point. You start somewhere. You start with what you have and you can work your way up. The S&P 500 actually has a rate of return of 6% annually, dating back all the way to the 1980s. That is why it's good to just invest a little bit into the stock market, but remember that it can be risky, and it probably is in your best interest to try to go to an expert. So now you might be looking at me and wondering, why can I not just gamble with my money? Isn't that essentially what I'm doing in the stock market? And I can answer that in an entire another video over here.